The stock market is trading lower here today, down 1.13% at the time of recording this, and we'll see how this day ends up because today we have a really big event happening for index traders after the bell. One of the largest stocks and perhaps the most influential stock in the stock market reports their earnings after the bell, and it is none other than Nvidia. And for those of you who don't quite know what Nvidia is or you haven't heard of it before, it is a ginormous semiconductor creating company. They build chips for computers basically, and with all this AI hype, they've sort of been the picks and shovels seller to the rest of the market. And it's no wonder why they make so much money when you consider who their actual customers are. Things like Meta, right? Of course, Google, when you take a look at Microsoft, these are ginormous companies that purchase a ton of stuff from Nvidia, and these are the largest companies in the stock market. That being said, despite the morning volatility, we can still kind of take a big picture look at the NASDAQ and the S&P 500 and acknowledge that they are in very strong upward trends. And as this thing sort of starts to pull back, I will be looking to see if there's any opportunities that I can find or trading setups that look good to me. I still remain pretty bullish on stocks when we consider a few key factors going into next year. So the first reason would be that the Fed is still expected to cut interest rates next year, which is a good backdrop for stocks generally speaking. Number two is that corporate earnings have been pretty strong in the US, and this is of course a very important metric to watch for stock performance. Number three is that the US economy seems to be holding up pretty decently well. We've gone over that in recent videos, but a couple things to point out is that the labor market seems pretty well intact. Inflation is cooling off and GDP expectations are still relatively strong going forward. And finally, a return of Donald Trump into the president role does have some pretty interesting impact to the corporate world. Specifically, less taxes and less regulation for certain businesses, especially like financial companies, biotechs, things that really benefit from less government oversight can really thrive and potentially be very profitable in coming years. That being said, this one comes with a bit of an asterisk next to it, simply because with Trump also comes the question about how much spending is the government really going to do? What are these tariffs going to do? Is inflation going to pick back up again? So there are certainly some questions that come with it. But I think in the short run, the stock market is at least celebrating the known, which is Trump is likely with a red wave to bring less taxes and less regulation to the general atmosphere for US business. So all this said, I do have a bullish outlook for stocks going into next year. And my theory here would be wait for the right setups, wait for pullbacks, wait for opportunities, and continue to trade this upward trend. Give it the benefit of the doubt until it shows you a reason something in this story breaks. And we'll see if that does. Eventually something will come along that challenges this. But for right now, these 4 points keep me pretty bullish overall. In regards to current setups on the Edge Finder, it's a little bit of a light week in terms of watch list items. That being said, personally, I will be watching Nvidia. I mentioned after the bell. I'm contemplating whether or not I would like to live stream that event. And if you'd like to tune into that, make sure to hit the subscribe button on my YouTube channel and hit the notification bell so you get notified whenever I go live. The Nikkei, Aussie Yen, Aussie Kiwi, Euro Yen, CAD Yen, and Euro Kiwi. These are some of the current bullish readings. And we have NZD CHF, USD ZAR, Kiwi CAD. So a lot of currency pairs sort of showing up on the watch list, though none of them US dollar pairs, which are the ones that I generally trade the most. And despite the stock market being down, Bitcoin continues to rip higher here. We're at 94,400. We almost tapped the 95,000 level, and it seems increasingly likely that we may go test that fabled 100,000 mark on the price of Bitcoin. I think it's especially impressive that on a down day for stocks, Bitcoin is still up despite their high correlation to one another. This just shows that there seems to be a craze for crypto right now with the return of Donald Trump, but also just generally speaking, perhaps the consumer is feeling a little bit better after those years of inflation. Inflation has cooled off a little bit, which does not mean prices come down, by the way. People who are newer to fundamentals or to economics in general often get the two mixed up. Inflation coming down does not mean prices coming down. Inflation is how fast prices are rising. So if inflation's coming down, that just means prices are rising slower. They're not coming down. That being said, I've mentioned this also because people always want lower prices. We all do, right? Who doesn't want to spend less money when they go to the grocery store? However, lower prices usually come with everybody losing their job because, again, the economy's in the dumpster. That's usually when prices fall. So be careful what you wish for. We don't want prices to fall because because that probably means we all lose our job. But we want things, generally speaking, to rise in price at much slower rates than they have in recent years. Things have improved on that front, and a little bit of extra money in the pockets of the average investor could be part of the reason why crypto is still doing quite well, despite, the stock market coming down a little bit recently. Also wanted to take a second to remind you that our Black Friday sale is ending soon, and it is our biggest discount of the year. If you're thinking about getting a copy of the Edge Finder, or if you want access to our VIP group, both of them are currently 40% off. There's a link down below in the description if that is something you're interested in taking advantage of. I do want to just speak transparently that if you've been thinking about doing this, this is the lowest price of the year, and that deal is ending soon. So if you've thought about getting a copy of the Edge Finder for 2025, if you plan on making 2025 a better trading year, I know we get those people every year. If you plan on making 2025 your year for trading, then start now. Get yourself the right tools, get yourself the right education, quit throwing all your money into prop firms, and instead take a second to actually get the proper tools and education you may need to start making progress in your trading. I can't tell you how many times, we've had people who come to us and they just say, well, I don't have any extra money because I'm throwing all my money into prop firms. But the logic there is so bad, right? They don't want to invest money into buying the proper education or tools, but they'll keep throwing money into prop firms because they feel like that's their way to make big money. Don't be one of those people. I'm telling you, I've had so many horror stories of people who tell me later on in their, they disclose basically that they spent thousands of dollars on prop firms, were left with nothing, and now are trying to get educated and actually properly learn how to do this stuff. Don't do it out of order. I'm telling you, that's a very common mistake for people. If you're going to spend money on anything, spend money on proper education, the right tools. Don't spend money on prop firms until you're really ready and really confident in your trading. That's a little note for you to leave off with your day. Also, we live stream Monday through Friday. If you're not a part of the live streams each day, I highly recommend that you come join us. It's of course free to join, and I'll play you a quick clip just to give you a bit of a sample of what kind of stuff we talk about each day. Check this out. Let's take a look at yields. Also, yields are, this is a daily chart. Yields are up here the last several months. Going back to September, we bottomed out on yields. What's interesting, guys, is that just when the Fed started cutting rates, what happened to yields? They shot up. And if you are someone new to fundamentals, it is understandable why that might sound really confusing. So you say they cut interest rates, and yet yields, which largely track the bond market's expectations of future interest rates from the Fed, start to go up. Seems a little confusing. Well, the reason is because the yield world, the bond market, is trying to figure out going forward where on the next 10 years, what kind of yield are you going to get from treasuries holding long-term US bonds? Well, it's gone up because US economic data has been largely stronger than expected. And inflation expectations have also ticked up a little bit with Donald Trump coming back into office. Well, he's not in office, but his return in January has market participants a little bit concerned about, okay, all these tax cuts, all these tariffs, what is that going to ultimately do to inflation? Now, I'm not necessarily saying that I think inflation is going to go skyrocketing. I'm just pointing out that the bond market clearly does think so. And that's a fair statement, because you know what is also a fair statement is that the stock market pumped Donald Trump's return because tax cuts and less regulation are perceived as just strong for the stock market. So it's a fair thing to say that inflation ticked higher, likely because of the strong economic US data, as well as the uncertainties and expectations that tariffs, if introduced in a stronger manner, could be inflationary. It's probably why the dollar index is up. Well, it is the reason. If you have yields jumping, it's probably the same forces that are driving the dollar higher. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.